Like the rest of the crypto market, Ravencoin has gone through many different cycles this year. Some are bullish, some are bearish, but consistently they've been very volatile. With high volatility comes high levels of greed as well as high levels of fear, uncertainty, and doubt. FUD can affect even the most senior investors and dedicated hodlers. I discovered Ravencoin several months ago and made a price prediction in May of this year that the coin's value would 6 to 10x in the following 12 months. That would mean a market cap of $10 to $20 billion. Do I still believe this will happen? The answer is yes, but maybe not within that time frame. The reason for this potential delay has nothing to do with Ravencoin itself, and instead has to do with a potential catastrophic event proliferating the global economy. While I do still believe that Ravencoin is massively undervalued, and I will personally be holding on to a stack of it no matter what happens, I also believe the worldwide economy is on the brink of a major correction and no store of value will be safe. In this video, I'm going to lay out some of the potential growth factors for the Ravencoin network, and then I will discuss the concerns I have with the precarious state of the markets in general. Finally, I will discuss what my approach to Ravencoin will be over the long and short term. There's a lot of factors that control the price of Ravencoin and the price of crypto in general. Some of these factors are totally unpredictable and out of anybody's control, and anyone who tells you they know exactly what's going to happen in the markets tomorrow is lying to you. However, deep research and observation of macroeconomic trends are proven strategies that help investors make the right decision the majority of the time. So with that being said, let's dive into some of the growth factors that could cause Ravencoin to take flight. Ethereum's move to proof of stake. This is the most obvious and anticipated growth factor in the Ravencoin network. When Ethereum goes proof of stake in the first quarter of 2022, as is currently planned, all of the GPUs originally powering ETH's blockchain will need to go somewhere else. That is millions of graphics cards, many, if not most, of which are expected to be moved over to Ravencoin. This is because Ravencoin is the second most profitable cryptocurrency to mine. Ravencoin is in position to take the GPU mining crown. This could cause a short-term price spike over the next 3 to 6 months. Ravencoin's halving in 2022. Raven's halving in January of 2022 also bodes well for the future of the coin, as mining the coin will become 50% less profitable overnight. Ravencoin's transaction fees are already low. This reduces them further by decreasing new supply by half. The halving also increases the rarity of each Ravencoin because a halving will occur each cycle until the block reward can no longer be halved. This, combined with Ethereum's move to proof of stake around the same time, is a potential powder keg for the network's value. Ravencoin's asset system. Ravencoin's asset system is a potential major growth factor for the blockchain over the short and long terms. This is because there are endless possibilities for what the system can be used for. Take the partnership with HydraChain and DigiShares, for example, where they tokenize the value of real estate using Ravencoin. If Ravencoin can become a medium to break down the barriers of entry for publicly traded investments, the sky is really the limit here. The transaction fees for Ravencoin assets are remarkably low, the Ravencore UI is solid as a rock, and the developers are constantly working on new features, and I can see Ravencoin tokens being feasible for many different kinds of projects. Now that we've talked about some of Ravencoin's growth factors, let's talk about some items which may hold it back. The increasing level of political and economic turmoil in the United States and elsewhere does not bode well for the markets in general. It is clearly seen that the Federal Reserve is artificially propping up the US economy through the printing of trillions in stimulus, less than a third of which actually went towards direct stimulus checks to American citizens, as well as bloated multi-trillion-dollar infrastructure bills. What this has resulted in is scary levels of inflation for things like housing, gas, and groceries. For example, I personally bought my first home in November of 2019. My timing could not have been better in this respect. At that time, the price of a 2x4 was under $1. Now, the price of a 2x4 is over or right around $4, and the price of homes has skyrocketed. While the interest rates are historically low, anybody trying to buy their first home right now will tell you it doesn't matter. It is incredibly difficult to do so. Prices are very high and inventory is virtually non-existent. The lockdown, as well as the eviction and mortgage moratoriums, have further contributed to the crisis by closing down small businesses and forcing many mom-and-pop landlords to sell multi-units to large investment firms like BlackRock Capital, who swoop in like the true vulture capitalists they are. The pandemic response has clearly caused many major problems in the global economy, but has also created a time bomb of debt that is unlikely to ever be repaid. A significant and frankly scary example of this in recent news is the Chinese real estate company Evergrande threatening to default on liabilities exceeding $300 billion, much of which is tied up in the U.S. real estate market. For reference, the entire 2008 bailout of U.S. banks totaled $700 billion between all banks combined. This is one company we're talking about here. Evergrande has 30 days to either pay their bills or default. In my opinion, this could cause a global housing crisis similar to the scale of the 2008 financial collapse. Will Evergrande pay their bills? Will they be bailed out by the Chinese government? Or will they be simply allowed to fail? I don't know the answer to these questions, but I believe that they will largely determine what impact will be felt by this in the crypto markets. For more details on the Evergrande problem, I would highly recommend going over to Clayton's video at Morning Invest. Link is in the description box below. An additional factor of market uncertainty is that Congress has been floating additional crypto regulations on top of the already very restrictive travel rule, which require identity verification for basically any blockchain transaction over $1,000. It appears that some congressional leaders are trying to sneak these regulations into the pending infrastructure bill, which is set to be finalized by October or November of this year. For more information on that, Guy at Coin Bureau does a great job of breaking these looming regulations down in detail. Link in the description box as well. My plan for Ravencoin. All of these factors combined paint a pretty bleak future for the markets in general, but does that mean that I am pulling my investments or I'm no longer believing in Ravencoin? Absolutely not. I'm just saying that we monitor these items and be ready to buy the dip if we hit a bear market. The world is never going to be free of market volatility, political corruption, or the looming threat of the next economic correction or collapse. That doesn't mean that we become complacent or pull our investments out of fear. What it does mean is that we need to stay vigilant and constantly monitor our level of exposure, as well as periodically reevaluate our personal risk tolerance. I think that diversification can help in this respect. As many of you already know, I'm a crypto miner. I'm tempted every day to sell all my other holdings and pour everything into building a big mining farm, but I resist that urge because as much as I love GPU mining, diversification is a steady, long-term strategy that is so much more of a stable bet. As profitable as mining has been for me, I am so glad that I bought real estate when I did and that I've been continuing to put money aside for other investments like home renovations, blue chip stocks, IRAs, 401ks, index funds, etc. With that all being said, Ravencoin has been one of my most profitable investments this year alongside Dogecoin, but I really owe my Dogecoin gains to a combination of luck as well as averaging in. For example, I bought most of my Doge at 0.05, then averaged out my shares as the price grew. I bought a little more during the dips and continued to sell as it trended upwards. My average sell price was probably around 40 or 50 cents. I'm out of Dogecoin currently, but I made close to 1,000% gains on that deal alone. Could I have made more if I waited until 70 cents and dumped everything at the peak? Yeah, absolutely, but hindsight is always 20/20 in the investment world, and the likelihood that I could accurately predict the precise moment in the market where the price of Doge had peaked is very, very low. Averaging in and averaging out has helped me tremendously and has led to steady profits without taking on a ton of excess risk. I'm not a financial advisor, so I can't tell you that you should utilize this strategy, but it has definitely helped me. I feel like a lot of new investors make the mistake of seeing what they think is a good price for a coin, throwing their entire portfolio at it, only to see the price drop 20% the following day. They panic and sell everything instead of being able to buy the dip. So, for example, if I had $1,000 to spend on Ravencoin today, I might buy a little bit now, but then monitor the price over the next few days to see if there's another dip I could buy in on. I would also set some limit buys at a somewhat unrealistically low price because if they do trigger, then great, but if they don't trigger, then no harm done. I'd say about 50% of my Ravencoin holdings are long-term investments that I do not plan on selling for the next 36 to 48 months. The other 50% I play around with, keeping it a little more liquid. I'll try to sell at peaks and then use those gains to buy the dips. So, in conclusion, I think that we may see a spike in Ravencoin's price in the next 3 to 6 months because there are some tremendous growth factors to the blockchain. But I also think that we need to keep an eye on what's going on with the world economy and tread carefully because if there is a collapse, Ravencoin can have all the growth factors in the world and it won't matter. I'm not here to spread FUD. This Evergrande thing may fizzle out. I'm not sure. I'm just saying don't keep all your eggs in one basket. Protect yourself, diversify, and be ready to buy the dip if we need to. Thanks for watching, everybody. Like and subscribe if you enjoyed this video, and I'll talk to you all very, very soon. Bye-bye.